Live streaming is on.
Hello. 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 Well, good afternoon and welcome to this webinar on personal taxes. We are going to wait 1-2 minutes for people to connect before we start. We are happily surprised because we had a lot of registered people to this session. It's funny. That's something that I guess everybody dislikes, such as taxes, generates so much interest. Well, I think I can start doing this introduction, okay? Before everyone start, well, people are connecting, so we wait just 1 minute. Okay, well, good afternoon. We are in a live stream webinar on personal taxes in Spain. Thanks for being here today. My name is Judith Romera, and I'm a member of the Barcelona International Welcome Team from the Barcelona City Council. This session is a part of a program of activities we organize throughout all the year for the international community living in Barcelona. Most of our activities are in English. And we organize things like informative sessions covering different topics like this today, workshops, guided visits, networking events. If you don't want to miss any of these activities and you want to stay up to date with what is happening in the city, please register to our monthly newsletter. I think in the chat will be the link to the form to register. And well, as I said, today we are covering personal taxes. I think all you know that now in Spain we are in the tax season, and it's time to submit and to pay personal income tax. We say impuesto de la renta in Spanish. And for those also obliged, there's also the wealth tax or impuesto de patrimonio. In this session, we discuss these taxes and we'll share the information that we believe will be of assistance to you. It's a practical session, okay? And we are very glad to have Lucine Minasian, sorry, Lucine, as our expert speaker today, okay? Lucine, originally from Armenia, is a licensed attorney, both in Spain and in her country. She is fluent in 5 languages. She holds 2 bachelor's and 3 master's degrees in law, and currently she is completing her PhD. Furthermore, Lucine is a professor of law and ethics in a business school. We are very glad to have such an expert person. Currently, Lucine works as a senior tax lawyer in Avalandin, which is a firm of economists and lawyers with headquarters in Barcelona. And just to finalize this introduction, I would like to briefly explain the schedule of the webinar. First, Lucine will give her presentation. As I said, it's going to be very practical, and you don't need to be an expert on that because it's going to be very, very helpful. Afterwards, there will be time for questions and answers. And then you will be able to write your questions in the chat of YouTube, okay? And our expert will try to answer them. Maybe there will be answers to be respond, but we'll explain later a way to solve that. But I don't want to take more time to Lucine. So please, Lucine, the floor is yours.
Thank you, Judith, and thanks to everyone who is connected. This time you have found time slot for me. I will try to take you through the most basics of the Spanish personal tax system, and just to explain you for whom exactly this presentation has been designed. This is for people who don't know or know very little about what exactly individuals owe to and when they owe to Spanish tax authority. And so it's not for lawyers, it's not for people who, let's say, have more advanced level of knowledge. So the expectation that I want you to have, that after this session, you will know like what I call the ABC. And before starting the presentation, well, Judith has already introduced me, so you know my background. I have started as a criminal lawyer, then, well, I've worked a couple of years as a criminal lawyer, then I have changed my professional profile, and last years I am dedicated to tax law. Well, let me start sharing with you the presentation. We have it here. Okay. I'm sorry for technical bugs. Okay. So hopefully you can see it. So first of all, to locate you where we are, what authority we have in order to talk on these topics. Well, Avalanding is a law firm that is working mainly with international clients from different countries, from different continents, and the whole idea of this lending that we take both individuals and companies through different journeys. Through, if you are new to Spain, to Barcelona, we are helping you with the initial settlement, with all the paperwork, whether it's migration, whether it's taxation, corporations, or anything that you see. All our professionals they're wonderful professionals and wonderful people. They are all English speaking. We have English speaking personnel, and well, we are happy for any new case, for each client, for us, like the unique. So we try to give you the one reference point so that you have your lending, you have your account manager, and that person is your only reference point, independently of the subject matter that you want to clarify with the specialist. Well, no need to make presentation on me, though I have prepared this part. You already know who am I. Okay, let's see basically the agenda, which will be the topics that we'll cover. The first part will be about the tax residency. I would say that maybe you should take fundamentally criteria that determine tax residency, because the rest of the topics that you see, the rest of the taxes, their applicability depends whether you count as tax resident or non-resident. So after we'll see the famous IRPF, which in English is the personal income tax. Then we'll have a look, again, very famous and scary model, 720. That is applicable, we will see later for what exactly. Then we have this Beckham Law Regime. This is a special tax regime for a specific category of potential taxpayers, and it has a huge tax benefit, and if you comply with its requirements, you may apply and get the approval from the tax administration in order to be taxed under this Beckham Law Regime. Later, we'll go through the criteria. And at the end, we'll have a look also at the wealth tax, which in Spanish is Impuesto sobre el Patrimonio. I put here the Spanish abbreviation as well, because if you within the taxation, you will hear a lot of this abbreviation so that you can allocate the information in the correct mind box, let's say. Well, before moving to that, as Judith said, at the end we'll have the question section. We are really happy that so many people have connected. But I guess in time scheduling, we'll have very limited time for answering. But don't worry, because we'll leave contact details, how you can exactly reach us or reach me for tax matters. So if you type any question on YouTube and we cannot answer because of the time scarcity or because there is an overload of questions, don't worry, your questions won't remain unanswered. You will have a contact point. So I guess that's it. Let's start. Now I want to make the browsing experience smoother. Okay, so personal taxes in Spain. What exactly we will cover? This session is limited only to taxes that are applicable to individuals. And as you know, individuals may be involved in business activities as sole traders, though they will be taxed under the personal tax, the IRPF, but it has certain peculiarities that we won't cover today. So basically what we'll see today is for individuals, namely individuals who are not doing any self-employed activities. We'll touch the basic, but we won't go into the detail. And obviously, we will not cover the non-resident tax. We won't cover the corporate taxation because it will take us many hours and you will have a mix of information. I know that taxation can be boring, so I have tried to design the presentation in a simple way. Okay, so tax resident. Oh, well. Let's give a space to our very smart and cool figure that was quite smart enough back in time to conclude that there are only two things that are certain in the life, which is death and taxes. No, at some moment they will touch each of us. So I'm sharing totally the conclusion of Benjamin Franklin. Okay, the tax residency. Before entering into detail, I want you to have it very clear that concepts of residency and tax residency, they have nothing to do with each other. Because it's very common to hear from people saying that, well, I don't have a residency permission, I'm not sure whether I can be a tax resident, etc. Residency concept, it comes from immigration, while tax residency is related to fulfilling certain criteria that makes you a tax resident, even if you don't have that migrational category of a resident in Spain. Why I said that probably this is the most important thing that you should keep after the presentation, because depending on whether you comply with all these requirements, you will be liable to Spain, or you will, in tax terms, or you will be liable to other country, like the country of your previous tax residence. And tightly connected to tax residency concept is the issue of double taxation that we'll also have a look at. But let's try to understand on international level what exactly means tax residency. Well, basically, tax residency means which country has a competence for taxing your incomes. And since taxation is a very important part of each country's, each state's sovereignty, unless there is no agreement, which will be the conventions that we'll talk about, each country by default has a right to tax income that it considers to be obtained on its territory. So on international level, if we're taking that question, whether I, let's say, count tax resident in Spain or let's say in Italy, where I have lived before. So the first and most commonly used criteria is the first one that you see on the screen, that the Spanish regulation on who counts as a tax resident in Spain, they take into account the number of days that you have remained in Spain, again, during the calendar year. So let's say you have moved to Spain in October. October, even October 1st, October, November, December, you have remained here only 92 days. So basically, you are not compliant with this requirement of 183 days of permanence, physical permanence on the Spanish territory in order to count as a tax resident. But this is tricky in a sense that you cannot rely only on counting the days that you have remained in Spain, because as you can see down below, there are also criteria. Imagine people who, because of their work, they are moving a lot around the world, they are traveling on business trips, etc. So it may be the case that the person, though complying with the rest of the requirements that we'll see now, in fact, remains in Spain per year only 2 months. But the Spanish tax authority may have a look at the second criteria, which is basically where is located the base or the center of your activities, of your economic interests, or otherwise called the center of your vital interests. Imagine you work for a Spanish company, but again, the nature of your work requires you to be out on business trips almost the whole year. You cannot say to the Spanish tax authority that, you know what, for my income, I should not pay to you anything, because they will say your center of your economic interest is located in Spain. So I count that even despite of you being out for more than these days, you have here the center of your interest. And there is also a presumption, let's say, that is like the last rule. And the presumption says that if you have a family and your spouse and your minor children live in Spain, and those children are dependent, if they live in Spain, independently how many days you have remained here, Spain should be considered the place of your tax residency. Against this presumption, you can bring any type of evidence that is admissible under the law, like showing that your family, in fact, has not remained in Spain during that year, or any type of, for example, your spouse tax residency certificate. So anything that you can bring an argument against this presumption can prove that, well, despite of your family being here part of the time, Spain is not the place of your interest, of your tax residence. I have mentioned the concept of a tax residency certificate. What is that exactly? This is probably the most powerful evidence to show which country has a competence over your income taxation. And within that certificate, well, usually it's either in English or bilingual, and it says that it should say that this authority, like in this case will be the tax authority of this country, certifies, or according to the information available in database, we certify that this person with name, surname, sales, etc., have been the tax resident in our country, the country that certifies, during this period. So this is the strongest evidence that you can have against Spanish tax authority claim that you are a Spanish tax resident. So again, the most important, how many days have you remained in Spain? or even if you have remained less than 183 days, whether the center of your vital interests were in Spain or not. And lastly, the presumption that if your family is here, they are dependent on you, especially in case when we're talking about married couple, they are not separated nor divorced. It supposes that wherever the family is located physically, then you also have your home or tax residence there. Well, related to criteria of tax residency on international level, the one that you see here, DTA, well, in English, but in Spanish it's SDI. DTA is opened as double taxation agreement, and these are mostly bilateral agreements between two countries where they, the governments of the represented countries, they decide who has taxation competence and over what type of the income. For the moment, if I'm not mistaken, the Spain has around 100 double taxation agreements. It can be like 3 more or 3 less. So it's hard to find a country with which the Spanish kingdom does not have an agreement. And this is a good news for you because you will be covered from this double taxation issue. What happens if there is no DTA, there is no double taxation agreement? You end up in a situation where both countries, if according to their national requirements, you are a tax resident according to their domestic regulation, they both may claim tax over a certain income. And what happens if there is no double taxation agreement? Well, the only option that the person, the applicant, makes a petition, makes an application to one of these countries where he or she thinks he should not be taxed, to review his or her case individually. And of course, that will be left to the appreciation of the tax agency because there is no double taxation agreement. Here I have left the link. There you will find the list of double taxation agreements signed by Spain for the moment. You will, but be careful because old agreements, they have also ratifications, they have protocols, etc. So you have to take the updated text. And within the double taxation, the country says which tax are exactly covered, which are the, let's say, the sequence of criteria that we take into consideration when considering whether this person is tax resident in my country or yours. And at that point, I want to warn you about another very big misconception that people have related to citizenship. It doesn't matter which country's citizen you are. For tax residency, this is the last connection point, meaning that if you are a Brazilian citizen, but during the previous 30 years you have lived, for example, in Germany, the mere fact of having the Brazilian passport does not entitle Brazil to any taxation competence. Okay, so this was on international level, but here, as you can see, I have separated also tax residency on national level. What that means, imagine we have clear that you are a tax resident in Spain. You comply with all the requirements. But as you know, the governance, or let's say the state structure in Spain has central administration and it has autonomous regions. And when it comes to personal taxation, the competence as to regulating not only a very important part when it comes to deductions, reductions, etc., but also on the applicable rate, bonifications, etc., that competence the Central Tax Administration has seized or is sharing with local, with autonomous region tax agencies. For that reason, it's not sufficient to understand which country tax resident you are, but in countries like in Spain, with this type of state division, you should understand which autonomous region tax resident you are. Imagine you came to Barcelona, but you have friends or family, let's say in Valencian community, and at some moment during the year, you decide that, well, it's better I move to my community, I stay closer to them. So now, potentially, you will have this question, okay, am I a tax resident in Catalonia? Because I have remained there a certain amount of days, or am I a tax resident in Valencian community? So again, the Spanish legislation settles certain criteria that we may use that can be helpful. And similar to international tax residency criteria, the first and most easy to detect is the physical permanence, where you have stayed more days. But here, the law does not necessarily require you those 183 days. It says the majority of time during, again, the calendar year. And another, let's say, presumption is that wherever you have your residency, your habitual residence, that place, that location counts as your tax residency place. Imagine you have a house, it's your only house in Barcelona, you live here, but your kids are, let's say, in Malaga. And you decide that from June till September, you will pass all your holidays with your children there, no? So the criteria will be maybe a little bit confusing. You can say, okay, I have passed significant amount of days there, but well, in this case, first of all, from June to September, it does not count the majority of the time by the year, but the argument against will be that you have your permanent residence, your house where you stay in Barcelona, and also your intention why you have lived with, you left with the intention to come back. This same is applicable also to international level of determination tax residency. Again, imagine you live here and your children are students in the Netherlands, and you decide to spend with them, I don't know, 5 months, 6 months, etc. All these absences, what the law calls periodic absences, though you are out, physically you are out, but you went with the intention to come back, and if you have house in a specific place, that's like an argument, a strong argument that your tax residency is there. Well, and let's say we cannot determine in which autonomous region you stayed more days during the year, then we can go like through the rules. Again, this is similar to international tax residency. If you are working for a company that is located in, again, I'm taking the example of Barcelona because we're in Barcelona, all the center of your activities are here. Again, you may be out the majority of time because of your work. You may be displaced to other regions, but again, the center of your interest is here. And even if this criteria doesn't work, you are left with the last one, which says that by default will be that the tax residency that you have declared in your previous personal income tax return will be considered by default that you continue still your tax residency there. Well, I hope it's not too much information, but it's very important to have clear where is your tax residency, because on autonomous regions level of regulation, specifically on personal income tax, you may end up seeing with very different panorama where in some places you are allowed to deduct certain expenses, or where the tax rate is less, or when it comes also to wealth tax that we'll see in the end, you will see that from, for example, the panorama that you have in Madrid and the situation that you have, for example, in Valencia, it's quite beneficial in Madrid rather than in Valencia. Oh, sorry, I have clicked on a wrong thing, so now it's not a full well, it's not a full page. Let's go back again. Okay. We have seen this. Okay, now moving the central part, the personal income tax or the IRPF. This type of taxation exists in all the countries around the world. They may be called differently, but the essence of the tax is the same. So, which are the most important features? First of all, the personal income tax is applicable to tax residents. That's why I was insisting that much. You should determine whether you're a tax resident in Spain or not. If you're not complying with those requirements, then this IRPF won't be applicable to you. For non-residents and only for a limited number of incomes, you may be subject to non-residents income tax. So IRPF, first of all, is only for tax residents. It's a direct tax, meaning that, for example, if you compare with the most famous indirect tax, the VAT, the value-added tax that you pay each time when you buy something from supermarket or you buy a medicine, you buy a food, etc. VAT is indirect tax, meaning that, first of all, it's a fixed rate and there is an intermediary between who pays the tax amount and who passes it to the treasury. So if you pay to the supermarket, later the supermarket pays that VAT amount to the treasury. And so it's like transmittable. You can transmit it in the chain. In the case of personal income tax, it's a direct in the sense that it applies to an individual directly. It doesn't have a fixed rate and you cannot shift the obligation that you have, tax obligation under the personal income tax. That's why it's called direct tax. Then here again, we have or could have a disadvantage if, let's say, your general income is not only from Spain, but you obtain income from different countries. So under the personal income tax, the Spanish authority, again, keeping in mind that there are double DTAs, double taxation agreements. But by default, the Spanish tax authority will have a competence to tax you on your global income. So not only the ones that you obtain on the Spanish territory, but globally. Well, this is a personal tax, meaning that it applies to individuals, not to companies. And as I mentioned in the beginning, even if you are doing some business activities as a self-employed, you are still considered an individual. You are individual. For the issue of there is no separation of legal personality. All your income, all your responsibilities are not separated from your business, and it's quite common to see people who are at the same time self-employed and obtain salaries or other types of income. So under the personal income tax, you will have to sum everything. Every cent or euro that enters into your pocket will be relevant for calculating or identifying the scope of your tax obligations under the personal income tax. Well, this tax is subjective, meaning that it's personalized according to your personal circumstances. It's not the same to tax a person that is single, has no one on his or her maintenance, compared to taxing a family that has 4 kids, for example, because of course the expenses are higher, etc. So, this also complies with the requirement, the classical requirement as how the taxation should be. In order to have that justice, you should personalize the tax according to a situation of the taxpayer. We'll talk about joint filing of the personal income tax. This is an option. Imagine you have a spouse and the law gives you an option to file this personal income tax together, jointly. But again, there are certain buts. So by default, it's done on an individual level. Then we have this surprise, sometimes not a good surprise, that this tax goes higher. It's not a flat rate, it's not a fixed rate as it happens with companies taxation. No, they have a fixed rate, and independently of the amount of income made during the year, the rate is the same. So under the personal income tax, more money you make, well, obviously and logically, more tax you pay. And this tax is periodic, meaning that we'll see now the timeline to which it applies, but it's periodic. So you pay it per year for incomes per year. We'll see it later. Okay. Under the Spanish personal income tax system, we have this duality. As you will see, the Spanish legislature divides the income or the type of the income you may have into two big groups, like general income and savings income. Why they do that? Well, you may have certain benefit because of that division. We'll see it on the next slide. And lastly, but important point, that what I put here, federal, meaning that state administration, okay? This is type of the tax under which the competencies are seized to local administration, and you should be careful if you are living with be careful in legal terms. If you are living in the Basque Country or in Navarra, because they have their separate system on taxation, on individual or personal income tax. So their system has peculiarities. What we see here in this presentation, I have tried to do it mostly based on the state regulation, and in some examples I have put the Catalan local regulation. But if you are from the Basque Country or from Navarra, please be aware that the system there as to the personal income tax differs. Okay, let's move on. So not everyone has an obligation to file the personal income tax. Even if we have identified that you are a tax resident and you obtain some incomes, this does not automatically lead to the obligation to file this. And by the way, this filing, the personal income tax, is done through Model 100 or Modelo 100, so that when you hear, you can know that it's the same what we see here today. Okay, a little bit complicated chart that you see on the screen. So you can see like Rule 1 and Rule 2. What this means? That first of all, we are looking whether we have criteria settled under the Rule 1. If we identify it, then we're not going down to the Rule 2. Imagine you are working for a Spanish company and your salary, your gross annual salary is 23,000 euros per year. This automatically means that you comply with this requirement because you are obtaining more than 22,000, and it brings you to this obligation to file this Modelo 100, no? So we have it. Or why here I have 14,000. Imagine you are working for two companies, and in one you are paid 11,000, in the other you are paid 15,000. So separately, none of them reaches 22,000, but in a sum. But separately, since you have two payers or you have two sources of that income, the Spanish legislature says that you will have to declare. And this income from work, within this category, we should include also pensions, subventions, etc. So when the simplest situation is that you have just the salary, and whenever it's above 22,000, you have to file. Okay, let's say you don't have salary, but you have other sources of income, like you have some capital gains. Imagine you have invested into shares, then you have sold them, so you have obtained a certain gain gain in that sell and purchase. So if that gain is less than 1,600 euros, if it's less, and it's let's say you have no salary, nothing, it's the only money that you have made during the year, then you don't have to declare. But if it's more, even if it's more for, I don't know, 5 euros, then, well, legally you will be obliged to file this. And the same goes with the third category. And here, one thing that may surprise you, what exactly means inputted real estate income. This happens when people have more than one housing. Let's say you have a second residency. You liked Costa Brava and you had house in Barcelona, but you have decided that you want an apartment in Tossa de Mar, so you have bought it. It's not rented, you have it empty, no one is living there. But for the Spanish tax authority, they count it as a source of theoretical benefit. So for that reason, I input you a real estate income, which means that theoretically you could have obtained a benefit. So how it's calculated? You should know the cadastral value of your a property that you have that is not your main residence, that you have it closed, to know its value. And usually on the cadastral value, it's by default, it's applied 2%. And if the resulting amount is more than 1,000, then automatically you will have an obligation to file this. But this 2% has some exception. As you know, cadastral value is something that can be reviewed because the market condition change, because of the demand, etc. So if the value has been reviewed, then the percentage will be, instead of 2, it will be 1.1. So this is technical information you don't need to know, but a surprise, especially for people who are new to Spanish taxation system, to know that if you have a second residency, even that de facto you're not obtaining any benefit, it will count as a source of imputed real estate income. Okay, as already said, when none of these sources of income is applicable to you, only then you are going to this second rule, or it's also called the minor quantity income rule. So let's say, I don't know, you are a freelancer. For example, here, the third line that you see, income from economic activity, you are a freelancer. Well, the year was critical. You haven't managed to invoice more than 1,000 euro. It says that you don't have to file the personal income tax. But if you have invoiced 1,100, then yes, you will have to file, because, well, the legislature says that even for a minor difference, I consider it not that much critical. And also the last rule, it says that if you had certain losses, imagine, again, you were buying and selling shares, and instead of obtaining a gain because of financial crisis, etc., you sold it with the losses. If your loss has been less than 500 euros, again, no need to file it. But if it was more, you have to file, because these losses, at some point, they are also beneficial for you to declare, because they give a possibility of compensating the taxable base. We'll look into it in a while. Okay, so timing. When exactly you have to file this? In Spain, like in the majority of countries, but not in every country, like UK, for example, is an exception. The fiscal year, the tax year, it coincides with the calendar year. So it starts from the 1st of January and it ends on the last day of the year, which is the 31st of December. So this year, if you are filing personal income tax, you are reflecting your fiscal situation of the last year. So in 2022, you are filing 2021. Why? Because the tax period has been closed. You know for sure what was your income, what were your losses, etc. So there is like a certainty, and the moment that when the fiscal year finishes, basically you have already an obligation to file. But since the platform through which you declare or the personal income tax to tax agency opens normally from the first week of April, this year is from the 6th of April till the end of June, so technically you are able to file it only from April. But from the legal standpoint, the obligation to declare starts from the 1st of January. Okay, here I have a little disclaimer for let's say you owe something to tax administration. So because when you file a personal income tax, it's not necessarily that you owe something to the tax administration. It may be a situation that applying reductions, deductions, etc., it turns out that during the previous year you have paid more taxes. So the tax administration pays you back that excess amount. But let's say the year wasn't lucky enough that now you owe something to the tax administration, so you have to pay. And if you mark the option of tax administration taking that amount directly from your bank account, so debiting, so they send an order to the bank and it's paid, etc. If you take that option, then you have time only till the 27th of June. So there is a difference for 30 days. Just a technical thing to take into consideration and not to leave it to the last moment. And I encourage you to start declaration, if it's your case, to start filing as soon as possible, because there are many nuances. Earlier you prepare, better the filing will be done. Okay, so now let's see what is exactly taxed under the personal income tax. First of all, the income from work. What means work? For example, if you are a freelancer, any money that you are making will count as an income from economic activity rather than from work. But within work, it's not necessarily just the salary that you are receiving. Let's say your employer sends you abroad and they have to pay you for maintenance, for hotel, etc. So law settles like the maximum amount that the person may be paid for those trips or for those meals, etc. So if the money that your your employer paid you, that extra will also count as an income from the work. The same refers if you are using your car for moving. Again, there is a limit there per kilometer. You can be granted only 0.19 cents. But if your employer pays you more, then the difference will be included within this income from work. Here you have also, if you receive pension or subvention, etc., all this goes under this category. Okay, then you have income from capital. Here, as you can see, I have differentiated between movable and immovable goods. Imagine you are, I don't know, you're a writer, no? And you are getting certain royalties. So that will be included under this capital. If you are obtaining, you have apartment, you are renting, then it will go under the capital from immovable assets. Well, the economic activities, again, this is, if we put it very simple, the income that are getting freelancers, people that are invoicing rather than getting a salary. They don't have an employment contract. They are freelancers or self-employed, is the same. Okay, capital gains and losses. This means any transaction that you make, like buying or selling, whether it's a house, whether it's a share, etc. If you get the difference that is in your favor, like it's a plus, then you have obtained a gain. If it's the reverse, then you have obtained the loss, and you include it in this category. Well, and the last is again the income allocation, the one that I have told you, the example of you having a second residence that you are not renting, etc., but potentially it's a source of income. Here I've put an important presumption For tax administration, by default, whatever you are doing, like you lend money to people or you work for employers, etc., it's supposed that it's paid. So if you say, no, I haven't obtained any income, you should prove. The burden of proof is on you rather than on the administration to show that, in fact, you have been paid. Okay. So,
Lucine, I think you have to hurry up because there's a lot of questions and the time is going fast. And
okay.
Hurry up. Sorry.
Let me just bring back to the full screen. I'm sorry, I like talking a lot because with students I'm talking a lot and it became a habit. Okay, so the option of filing individually or doing a joint report. Not always it's possible to do a joint report, and not always it's economically beneficial because there are certain amounts that the legislature thinks you need in order to live. Like per person, they count it per year, 5,550 euros. It's what per person. It's indispensable. But if you want to, let's say, file jointly instead of individually, you won't have a situation where you multiply this 5,550 per 2. You will just have a right to sum to that amount of 5,000 another 3,400. So it's not always beneficial and it's not always possible. Let's say you are living not in a I don't want to use that word official marriage, maybe in a domestic relationship or like pareja de hecho, no? It's not always possible to declare jointly. Imagine your partner has kids, you have kids, and the joint report that you may make, you can include in that only if you have common kids, but you cannot include your partner's kids' expenses in all those joint reports. So to put it very easily, if you are a married couple, then by default you have this option. But again, remember, this is optional. This is not mandatory. And you should have your numbers very clear in order to understand whether it's beneficial for you or not. Okay, let's move on. Tax rates. Again, as I've said, tax rates are, taxation is divided, this competence is given also to autonomous regions. And here you see like the state scale of applicable tax rate. Do you remember we have divided types of your income into these big groups, general income and savings income. Why we do that? General income, the typical is salary. So imagine you have the salary of, I don't know, let's say 20,000. So what you do, you don't take directly 24%. For the first part of 12,450, you apply 19%, and only to the difference between your 20,000 and 12,450, you apply 24%. So like the average between these two will be the tax rate that was applied to your general income base. On the other hand, we have saving income base. Let's say you have invest, or let's say this is typical to banks, no? When they lend money, they later charge interest, no? Or I don't know, you have invested in companies, etc. So this will go under this base. And here, as you can see, the scale is different. Let's say you had 10,000 of saving income during the previous year. So again, for the first 6,000, you are applying 19%, and only to the remaining 4,000, you are applying 21%. So calculating the applicable percentage is tricky, and I don't recommend you to do it individually because there are so many exceptions, so many reductions and deductions that you can apply. So this is just a general overview for you to see the minimums and maximums that you may find in Spain as to the personal income tax rates. Okay. Well, this is a chart, as I've mentioned, the most important part I will highlight. 5,450 is the minimum amount that the Spanish legislature thinks a single person will need. It's like indispensable that you have in order at least to survive. Then if you are older than 65, you will have an extra 1,100. If you are older than 75, another. So the maximum you may have 8,000 and something. Well, because of the age. Then you have certain amounts to sum. For example, if you have 4 kids, then the amount of the reduction, of course, will be higher. Or if you have just 1 kid, or I don't know, your spouse, they have certain disabilities, etc. The law settles the amount, the maximum amount that you can include in those reductions. Quickly, so those were reductions. These are deductions. What's the difference? Put very simple. Reduction, you take off from the initial taxable base, and deduction, you apply after you have applied the tax rate, you have the amount, you take them off. Again, here we have a separation between state or federal deduction and those that are applicable in a specific autonomous region where you are the tax resident. Well, for example, in case of Catalonia, you will have a deduction if you adopt a kid, or, well, let's leave the option of widow out, if you promote the Catalan language or the Occitan, etc. So again, each autonomous region has the competence to decide the extra deduction that they are granting to their taxpayers. Okay, well, this Form 720 is one of the less known, but the most important in fiscal impact or monetary impact terms. What is this model? Basically, this is a way of controlling tax evasion. Well, let's come to this slide after. What you declare, or who has to present this informative declaration. Again, under this declaration, you are not paying anything. You are just informing to the Spanish tax authorities what assets and of which value you have abroad, outside of Spain. So if you are a non-tax resident in Spain, this declaration does not apply to you. That's why I said it's very important that you identify. From that, you will have the scope of your tax obligations. Okay, so it applies both to individuals and companies or legal entities that have their residence in Spain. And this Form 720, again, is a tool for controlling, because as you remember, under the personal income tax, you are taxed on your global possessions, around the world. And this has also impact on wealth tax, we'll see later. So the administration wants to see the scope of your wealth, the scope of your financial situation. So you have to present this model, but only for 3 types of assets, and only if each of them exceeds 50,000 euros. Imagine you are a tax resident in Spain, but you are originally from the UK and you have a house there somewhere, and the value obviously will be more than 50,000. So if you're a tax resident here, you will have to include that house in your declaration. Or imagine you don't have house, but you have certain amounts in foreign, meaning non-Spanish bank accounts abroad. If they exceed 50,000 euros, you have to declare. And here, imagine you are a couple, you are a married couple, and the bank account that you have, or even the property you have, is of a joint or shared ownership. You don't have to calculate that, okay, if I have 50%, so my part will be 25,000 and I don't have to declare. No, we are taking the value of the asset independently of the number of holders, owners, etc. So in your declaration, you say that we have a house in UK. It has a value of, let's say, 300,000, and you have to convert that into euros. You have to use the currency rate that is as of the last day of the previous year. So if you convert and see that it's more than 50,000, you say, we have this of this value, and how much is my percentage is. Let's say I have the half, and I will mark that I have only 50% of that. Also, under this declaration, you are putting all the investments that you have. Imagine you are participating in those that is very trendy now, no? In stock markets, or you are participating in a foreign company, etc. So you should all include that. And again, this is a tool for not letting you space to do any illegal thing related to tax evasion. Okay, and when exactly you report it? This is not a declaration that you present each year. You present it, let's say this is the first year when you became tax resident. No, let's say 2021. You comply with the requirements of being tax resident in 2021. So for 2021, and you had time only till the end of March to declare your assets regarding the last year. And imagine during this year, during 2022, nothing changes as to the value. You still have the same house, the value hasn't changed. Well, in these stock operations, maybe you have a difference in the amounts, but if the difference compared to the last declaration does not exceed 20,000, you don't have to present it the next year, only if in each category of the assets that you are declaring, the difference is for more than 20,000 euros. This difference sometimes can be caused because of the currency rate change. Imagine you are just on a limit. Last year, your assets were 49,000 and you haven't declared. But this year, if you take again the 21st of December rate, you will see that, no, I'm passing the line, so I have to present the declaration. And this funny slide that I've put, well, this is more tragic rather than comedy. What happened? So there was a taxi driver from Granada, and he had assets in Switzerland that were in sum of 340,000 euros. And he declared he present this Form 720 out of deadline. And the deadline, as you remember, is till the end of March, 21st of March of the next year. So what did the tax administration? They have calculated that he had unrevealed or undeclared income. So they have calculated what exactly he owes in that concept, and they have imposed a fine. So in sum, the amount that that person owed to the tax administration was higher than the value of his assets. So this was like insane. And with his two lawyers, he applied to the commission, and then the case went to the Court of Justice, the European Court of Justice. And the court says that the Spanish regulation, when it comes to fines, first of all, it is more penalty rather than a way of securing the transparency and avoiding tax evasion. So it's definitely sounds more like a penalty. And secondly, that it's violating the principle of free movement of capital, which is one of 4 fundamental principles of the European Union. So very important. Many people confuse this. By this court decision, Model 720 has not been taken away. Still, you will have an obligation to present. What was the novelty introduced by the court is that the amount of fine cannot be that much disastrous. So the tax administration promised to publish, let's say, the new scale of fines that theoretically and for what type of violation, like if you present out of deadline, etc., how much it will be. So again, this form, the presentation, the obligation to present, if you comply with the requirements, it remains in force. It's not taken away. Many people say, oh, that's so good, the court has taken away. No, Modelo 720, it stays with us for the moment. Okay, well, Beckham Law, something that I've said quite beneficial. The name it has from the football player David Beckham, because he was one of the first people to benefit from this regime. What happens under this regime? Imagine someone comes, is hired by a Spanish company, a German tax resident moves to Spain because of the work, and he will remain here during the whole year. So basically that person is a tax resident. What happens? We will apply to him, or well, him will apply the personal income tax, the IRPF. But under this regime, you have a right, even being a tax resident, be taxed as if you were non-resident. What's the benefit? Well, the percentage, the scale, now we will see. So you remain, and the law gives you up to 5 years. It says the fiscal year when you move and get this approval, plus 5 years, during which you, despite of being tax resident in Spain, on your incomes, you will be taxed as if you were non-residents. Of course, it's not something that you are granted automatically. There are certain requirements to comply with, and most importantly, that you haven't lived, you haven't resided in Spain during the previous 10 years. If you have lived here 11 years ago, it's okay. But if it's within 10 years, then automatically you are out of this special tax regime compatibility. The second, you moved to Spain either because your company, your foreign company, relocates you, they send you because of certain business operations, they need you to be here, or you are hired, you move here because you are hired as an administrator, as a director of an entity that is located here. But here, again, a disclaimer, you cannot have more than 25% in that entity. Otherwise, it will count as a related entity, and then you have a problem with related entities, even with indirect participation. If your wife or your family member holds, let's say, 20% and you have only 5%, that may count as a related entity. So be careful with that. And the third requirement, that imagine you are coming to a filial or or subsidiary that your company has in Spain. Since this permanent establishment, they don't have their separate legal identity, so they don't count as separate in tax terms, in legal terms, then there you will also have a problem if the money that is paid to you or the income that is obtained through permanent establishment. Here I've put, again, what I have said, limitation as to time limit. You may apply for this regime only during the first 6 months when you move to Spain. Even if you comply with all the previous requirements, but you have applied during the 7th month, then the tax administration will say, well, you could comply, but it's out of deadline. So we're rejecting the application. And for the moment, but it's a matter of future, probably legal amendment, that in the future, this tax regime, special tax regime, will be applicable also to spouses. For the moment, if you come, you are granted this special tax regime, your partner, your spouse, let's say, that lives with you, they will have to be taxed as under the IRPF, as under the personal income tax. Meanwhile, you will enjoy this special regime. But, well, it's about to come, the change. They want to extend it. Okay, this is to see you visually why it's beneficial to be taxed under the special regime. Here, as you can see, the maximum, again, we have a differentiation between the type of the income, but on the lowest one, where you see 24% and 74%, this is basically what we apply to salaries. Imagine you came to Spain and the only source of income that you will have is the salary. So if it's up to 600,000, the maximum tax rate applicable to that income will be 24. If you compare it, you take it to the scale of personal income tax, to IRPF, you may end up paying like the highest. That's why it's not beneficial. But again, a little warning. If generally all your incomes, so despite salary, you have other types of income that are excluded from the first list, they are more than 600,000, that makes no sense for you to apply for this regime, because again, you will end up paying the highest percentage. So again, this is a matter of making numbers, but by default, this regime is quite beneficial if you comply with the requirements, rather than being taxed under the personal income. Okay, the wealth tax, the famous wealth
Sorry,
tax. Yes.
Lucinda, the wealth tax, so far there's no questions. Maybe we should really hurry up with the wealth tax and move on.
Okay, three 3 minutes, don't worry. Okay, so what is wealth tax? Basically, if you are a wealthy person, then you should pay extra. You should participate in this social justice. Okay, so here you see this is a tax that is assessed to local or autonomous regions tax authorities, and they may decide the applicable rate. I'm sure many of you have heard that there is a minimum amount that is exempt from wealth tax. What this means, here I have it on the second one. For example, in Catalonia, the minimum amount, the minimum value that is exempt is only 500,000. Meanwhile, the state scale gives you 200,000 extra. What this means? If you have an apartment here in Barcelona, and this tax is both applicable to tax residents and non-residents, so it doesn't make any difference. You will have to pay the wealth tax. So imagine, even if you are a non-resident here, non-tax resident, you have an apartment that has a value of, let's say, 2 million euros. So you are taking off, if it's in Catalonia, the 500,000, and you have the value of 1.5 million. So the previous scale that you have seen will be applied. And again, the calculation, you should go like with IRPF. You are taking with scale and then end up. So it's not that, for example, if the value is 1.5 million, you are not taking the line that says 1 million, blah, 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 with 1.365. No, you should go like resting off, and coming to the right percentage. But the idea is that you take off the minimum exempt, and for the rest you tax. Important notion, for wealth tax, what is relevant is the net value, not the amount that, let's say, you have paid when acquiring your property, but also you have a right to deduct certain expenses. You should add like taxes that you, anything that was related with that operation. So the net value does not necessarily mean that it's the price of the acquisition. And also there is a rule on like which price is higher, the price of the acquisition or the cadastral value, or the value that the administration assigned in the latest EB. Well, EB is the tax on property, real estate. So you will have to take the highest. And again, as I mentioned, in Madrid, it can be more beneficial if you're deciding in investing. Why? Because in Madrid, it's 100% bonificated, meaning that instead of like having this scale to apply, the wealth tax has 100% bonification. But again, this is not a guarantee that next year it won't change, the situation won't change. So important conclusions. Wealth tax is applicable both to tax residents and non-tax resident. And remember, if you are a tax resident, wealth tax will be applied to your global assets, meaning that not only what you have in Spain, but worldwide. So if you remember this Modelo 720, it's exactly why the administration wants to know what you have abroad, which are your assets. So this is another mechanism of control, not only for personal income tax, but also for wealth tax. And compared to that, if you are a tax non-resident in Spain, then you will be taxed under wealth tax only for the assets that you have on Spanish territory. Well, I guess that's all that I wanted to add. I don't know if you have questions. And yeah, here one notion. If you are a tax non-resident, but it may make difference whether you are coming, your residency is from EU member state country or not. Usually for tax non-residents, the exempt amount will be this federal scale, meaning 700,000. But imagine you are a resident in France. So for EU member state residents, though it's a little bit unjust, will be applied the exemption on the autonomous region level. So again, for a non-communitarian or non-EU residents, you will apply the federal scale or the state scale. And for EU member state residents, you will have to apply you can apply only the minimum that is exempted under the local or regional regulation. Well, Judith, if you let me talk, I can talk for hours. So
yes, maybe we can move and answer a few questions. Maybe I have been reading the chat and I can summarize and put few questions together. And so we can move on. We are a lot of people. There's a lot of questions, and maybe later we will put a link to the Lucine calendar.
Yeah,
so you can make a reservation. You can explain.
Yeah. Sorry, because I had another last slide to show you. Again, I'm not saying goodbye to you. This is just, as we say here, is hasta pronto. You have ways to contact me. First, you will have my Calendly, where you can book an appointment directly with me, or you may send, because you may have either non-tax related inquiries, you may send us an email, and our specialist will filter depending what question exactly you want to clarify, and they will sort. So later you will have a link to my Calendly. So don't worry, if you have made any question here, you will have 15 minutes free, let's say, consultation possibility through the Calendly. Yeah. Again, I'm really sorry that some questions will remain unanswered, but this was a real success. So many people, I'm really glad, and I feel sorry for those whose questions will remain unwillingly, but still unanswered.
Okay, Lucine, let's start a few questions. If something is missed, maybe they can contact you for this short call. Or maybe an email, but let's start. There's first, some of them, they were at the beginning, they were asking about the tax resident certificate. There's no certificate. You became a tax resident if you comply the requirements, but Angelo was asking about the certificate. There's no one.
So you mean it's your first year? For example, imagine you have moved from UK, let's say in August. Since in the UK, the fiscal year is from April, you may easily get from the UK tax administration a tax residency certificate. If it's your second year or third year here in Spain and you have access to platform, you can get that certificate from tax agency as well. It's well, all that information is kept in their system, and usually it even doesn't take hours to get the certificate. Okay. So by default, you all should fix the attention on this rule of the permanence. If you calculate that you came only in November, there is very little possibility for claiming that you were tax resident. Of course, imagine you come with all your family, you move all your furniture, car, etc. Tax authority may have certain claim, but still it won't be that much easy to prove.
Well, there's people that arrived at the end of last year in 2021, and someone was a bit complaining that they were the employer were
The Spanish company.
yeah, they were putting 24% of taxes, and they were paying the last months of the year since they come because they were they had a salary, and they said, "How come I have to pay? Why is the 24% deduction in their salary if they are not tax residents?" Can you clarify that?
That's the tax that we haven't talked, that I have warned you that besides all this, there is another tax for tax non-residents. So if you are non-resident and you are contracted by a Spanish company, they will retain from your salary the percentage that is applicable to non-residents income. Why? Because you have obtained that benefit from the Spanish territory, because the payer was a Spanish company. The situation will be different for people who work, let's say, on remote. You are still working for your home country company, but you come here. It's very difficult for the Spanish tax authorities say that that income, you were physically there in Spain, but your payer, your employer was a foreign company. So it's different. If you are hired by a Spanish company, they will have to apply to your salary non-resident income tax.
Okay.
So it's not IRPF what they are retaining.
Okay. There was another question very similar. I started to work in Spain in 2001 to last year until January, and I was paying, and he was paying 100 extra taxes per month. And the question is, should I make the renta to get this money back?
Well, again, since depending on the personal situation, you may have a right to certain deductions, and probably the amount that the tax administration owes you is very little. So unless you don't put all the numbers, you don't know whether it makes sense to take. Well, we encourage to do that because it's your money. You have a full right to take it. So if you know that you comply, let's say the salary was higher than 22,000, you will have. For other circumstances is optional. So if you paid an extra, because usually what happens in the December salary in nomina, people try to regularize the IRPF that they have paid. If during the year they were paying less, in the last salary, in the last nomina, they try to pay more so that in their personal income tax return next year, there is no debt. So they don't owe, well, imagine that it turns out you have paid less during the year. So next year, it turns out you owe 3,000 to the tax administration. Of course, you will have a possibility to fraction it and pay in parts, but it's advised to file the personal income tax because, well, maybe you will get back 300 or 400, but it's still your money.
Okay. Another question was about the amount. There was some questions regarding this topic. For instance, what if I earn more than 22,000 per year as a salary, but I have less than 100, 600 of capital gains? Do I have to declare the capital gains for that year?
Yes. So if one of those conditions is triggering, making it mandatory for you to present the declaration, you will include that. And that may be also interesting for you because that division between general base and saving rate, it gives you a right to compensate. Imagine you had a salary of 22,000, but you had, instead of gain, you had a capital loss, for example. So by summing that, the taxable base will go down. Okay. And you will have to pay less. That's why the legislature separates general and saving, and among them, they are incompatible. You may compensate only incomes within one group. Okay. If it's a general income, it's compatible with compensating with other type of general income.
Okay. There are two questions also about transfers. One says, what if I transfer funds from my home country? Is there a limit for this? Which category does it fall under the taxation purpose? And I read the other, which is quite similar. In 2021, the only income source was own saving transfer from outside Spain. Should I fill this transfer in the tax declaration?
No,
By the
basically.
way, this last person was under the Beckham tax regime.
Well, if it's like the similar is you take money from one pocket and put into another, so there is no income. You're just moving the place, the allocation of your resources. So in that sense, yeah. Or people that have no income, they have bank account in their home countries. It's just a saving account. You haven't made any benefit because of the interest, etc. You're just moving from one pocket to another. Basically, your well, in Spanish it's situación patrimonial. No, your situation, your financial situation has not enhanced anyhow. You remain the same. You're just moved from one pocket to another.
Great. Another questions were regarding employers. One question was, are not the taxes already paid by the employer? Because I think they had the deduction, so they had this doubt. Another related question was, in some countries, the employer have to bring you a document that sum up what was paid to the tax authorities for the last year. Is it also in Spain?
Yes. And for them, this is not optional. This is mandatory. They have to send you like a summary of the tax that they have paid. And be careful with trusting whether your employer has applied the correct rate. Because what may be the problem? Imagine you're working in different places. Each employer is applying the percentage taking into account only the money you make with them. So individually, the IRPF may be correct, but when you sum, you see that overall income that you have made from different sources is higher, or may happen because not because of not knowing about other sources, but they are applying the incorrect rate. Imagine if they apply less rate, you will end up with this very bad surprise that during the whole year you have paid less taxes because the employer has applied lesser rate. So, well, next year in April, May, or June, you will have this surprise that you owe to the tax administration. And when it comes to reductions, deductions, etc., this is not an obligation of the employer. This is what you mark within your declaration, like the tax pay. When you usually do an employment contract, there is a sign where you mark to which group you belong. Are you single? Are you married with kid? Or are you divorced with a spouse that has a certain amount of income, etc.? But the rest of the circumstances that give you a right for deduction or reduction, etc., the employer doesn't know. For example, they don't know if you have donated money to certain funds or you have invested into companies of new creation, etc. All that is reflected, and it's already your obligation to reflect if you want to save money in your tax return.
Well, we are almost running out of time, but I'm going to give you another question. I think you are so clear. I'm not an expert, but I'm understanding you.
Well, I've tried to make it as simple with as simple words as possible.
Well, another questions that were done was about double taxation. It was a question at the beginning. The double taxation petition is done after sending the renta. Where and how to do this?
Well, imagine that you have paid, because within the rental, within the declaration, you have a space where you mark the amount that you have paid in another country, because the convention says that it's due there. But what happens with double taxation? It may give a case that because of the percentage difference, you still owe something to the other country tax administration. So when you fill in, there is a place for deducting under the concept of double taxation. So you introduce the amount of tax that you have paid there. And again, you should have it very clear that you have paid in the right place. If not, the tax administration will say, now you pay to me, and later it's your problem to ask that money back from the other country. So the problem usually arises with countries that have this difference in fiscal years. Let's say in one it terminates, or if I'm not mistaken, in Canada, it terminates in March. So imagine you have to declare, and in Spain, it hasn't opened yet. So you are like claim for it from the Canadian side to pay, and it turns out that you shouldn't have paid there. So the tax administration, if they are competent, will say, "Well, I'm sorry, that's your mistake. You had to check the convention better." Correctly, you won't have a problem with double taxation. Neither you will lose money because you haven't applied some deductions that you could, or imagine you don't know that there has been an amendment in law, and this happened with maternity subventions deduction that many mothers now are claiming those amounts back because the legislature said that there should be a deduction. It's not a huge amount, but imagine multiplying with the number of women that have paid an extra, but the court said that they shouldn't have. So having the correct advice or done it through professionals will help you to avoid losing money or paying twice, etc. And again, probably from all the types of taxes that exist in Spain, I would say that even corporate taxation is much easier than the personal income tax. First of all, because of these regional differences and numerous amounts of deductions that you may have right to. So it's preferable that you have someone that advises you correctly.
Yeah. Well, Lucine, I think we could be here for more than 1 hour more, because there's a lot of questions. I think you have give a very good and clear presentation.
I'm happy.
I think while this has been recorded and it will be available, we will send an email to all the registered people with the link so they can watch it again. And again, in the chat has been copied the link to your calendar, so people can. Is a limited slot of time, so the first the first arrived, first served. And maybe you can continue with specific questions, because taxes is always very personal thing.
Exactly.
There's a particular situation, very conditions about family, about many issues. So maybe you have to have specific questions. But I really appreciate and thank you your participation in this webinar today. And thanks all for your interest and your participation.
Yeah, from my side as well, thanks for this opportunity, for being here with you, with the team, with people who dedicated their time for being here with us. And again, if you try using the Calendly and you see no slots, or because of sometimes technical bugs, it appears that there are no time slots, you can reach me by email. And again, thanks a lot. And as you, Judith, correctly said, taxes, I always compared it to tailor-made suit, no? It should be done just for you. You may have a general information, but it won't reflect exactly what you owe or what the tax administration owes to you.
Okay.
Thanks again a lot, and I wish a nice evening to everyone. We're close to weekend, so hopefully you will enjoy and we'll have a nice weather.